I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you. Interesting week, interesting day in the markets, too.
We have Amazon hit $1 trillion in capitalization, but it looks like a lot of people don't like that.
Well, the tech stocks are down today. The big cap, famous ones such as Amazon, Apple, Facebook, the Nasdaq, got hit hard this morning. And Twitter, the CEO of Twitter is testifying on Capitol Hill, and some of the people are attacking him. That stock fell 4%. And last week, there was, Donald Trump was saying that perhaps Google and these companies are kind of sort of conspiring against him and to generate search results he doesn't like. So I think that kind of is giving people a reason or an excuse, to sell and take some money off these things. And they've gone straight up, and really everyone owns them, it seems. They're the most popular stocks to own in the United States. Most people, Americans, they own some of the ETFs or Vanguard funds, then they'll put a little bit of money in these couple stocks, Facebook, Microsoft, Apple, and maybe some marijuana stocks or something if they want to speculate more. But the point is that these are the stocks everyone's playing, and so they're prone to periods of profit taking. But I think what's kind of more important in the long run is starting in July, we did see some cracks of weakness in the tech stock complex. Netflix, for example, it rolled over, and it's trading below the 50-day moving average. It's off its 52-week highs, and that had been the number one performing stock in the NASDAQ 100 up until then. And, of course, Facebook also now has a broken chart. So some of the tech darlings are no longer darlings, and there's fewer of them for people to chase, too. Now, I was thinking in July that this was a sign that the stock market, could be poised for a fall pullback, because when the leaders start to get shot like that, that's a bad sign. But at this point, I'm not really sure, how much the U.S. stock market will pull back or what it's going to really do, because what I'm seeing that seems to be a more definitive trend is that emerging markets are declining. Turkey, of course, blew up last month, but Argentina did it the other week. And this is, these emerging markets in China, too, they're all below their 200-day moving averages. They're falling harder when the U.S. stock market has a down day like today. These things end up making new 52-week lows. And we've also, unfortunately, seen pullbacks in gold and the mining stocks. And I think it's really linked to what's going on in emerging markets at this point. When we last spoke, the GDX was trying to hold support at 18, which was the low of a couple years ago, and then the low of August, basically. And today it's trading below it. So I think that's a confirmation that for now, the big cap mining stocks are probably going to act weak, along with commodities in general and emerging markets. And I think it's all forecasting a global recession, but the U.S. is poised to do better, from a comparative perspective. And I don't know if that means the U.S. can go up, the U.S. stock market continue to really go up in the face of all this, or if it'll just fall a little bit less. But it does appear that there's money going in the U.S. dollar and the bond markets. So, in a market like this, there's just those few stocks that everyone likes to chase, and I think they're ignoring what are breakdowns in other markets, which may end up being more meaningful in the long run. Maybe not this year, but probably next year.
With the problems that they're having in Turkey, Argentina, and so on, any chances of that hitting North America?
Well, I think it will in time. So I think one way to look at it is in the late 90s, there were blow-ups in Southeast Asia, Thailand, Indonesia, South Korea, actually Argentina too. And these were occurring between 95 and 1997. Really in 97 there was a big blow-up. And these markets fell for months, and it didn't impact the U.S. stock market until the very end, when there was panic selling in these markets. Then the U.S. stock market, I think the Dow fell 1,000 points in a day. In 1998, there was the Russian economic crisis too. And something similar sort of happened there, where the U.S. stock market topped out in the summer. It didn't really have a big decline or really scare anybody, but the Russia stock market just fell and fell and fell and fell. And finally there was big panic selling linked to that all over the world, including in the U.S. stock market. So I think that's the way this is likely to play out again, meaning that I think emerging markets are just going to fall and fall, for months, and it probably really won't impact the U.S. stock market until the very end of the decline in emerging markets. Because when there's something falling, usually the end ends with real panic. And we haven't seen that yet. And I don't know if that's going to happen in October, November, or carry over into next year. And also, if you think back to 1999, oil prices had a substantial decline and made a major bottom actually in 1999, and it is kind of linked to the global economy being slower and these crises happening in different parts of the world. In the U.S., there was no recession or anything like that until the U.S. stock market internet bubble blew up. So to make a long story short, this probably will hit the U.S. stock market for a couple of days when these markets bottom out, but that's probably months away from now. But I don't think it'll impact the real U.S. economy because while the global yield curve is inverted in forecasting a coming recession for the world, the U.S. yield curve isn't. It's getting close, but it's like 6 months behind the other yield curve. So I think the global economy will slow down, but the U.S. economy is probably going to be okay for at least another year, and it'll seem as if it's ignoring all this stuff going over the world, and I can just hear it now. We'll be turning on CNBC or something, and they're going to be saying how the U.S. is the only good place for people to put their money in, and this is why you should buy stocks, when it seems like when everyone is getting too excited and you gotta buy, it's time for a pullback. And even with individual stocks, that happens, as you mentioned. Amazon just got in the news like crazy for going above 2,000, and now it pulls back a little bit.
We'll have more with Mike Swanson right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Mike Swanson. Mike, some have criticized Amazon for taking their profits and putting them back into the company, building new warehouses, developing new products. But isn't that what you're supposed to do when you make profits instead of just buying back your own stock?
Yeah, I mean, Amazon is sort of, its business model is almost identical to Walmart, except it doesn't have stores you go into, but in the sense that it has supply chains around the world, and a lot of the goods are made overseas, and same thing with Walmart. And now they're building more headquarters, more warehouses, and so forth. And yeah, that's a sign of good growth and what you want companies to do, instead of just blowing money on stock buybacks, which is might be the main reason the stock market has done so well this year. We're actually poised for record stock buybacks going into the end of the year. But the thing about the stock buybacks is a lot of that is because of this Trump tax cut that came into effect at the beginning of the year, and they're probably never going to be as big as they are this year. So that's a factor in the stock market that will actually diminish probably starting next year.
Is there a point that Amazon gets too big and they start thinking about perhaps breaking it up like they did AT&T way back in the 60s?
Well, I think that's why the excuse today for these tech stocks being down is that because Trump said nasty things about Google, and he doesn't like Jeff Bezos because he owns the Washington Post, and they're grilling the Twitter CEO. But I don't know, when Trump attacked Google the other week, it went up that day. So I think this might all be more bark than actually bite, and I don't really know how they can break up Amazon. I don't know if you really can make an antitrust argument against Amazon, because with Microsoft, when that happened to Microsoft wasn't broken up, but they were under serious antitrust issues. And I think there was good reason with Microsoft, because they do have really a monopoly with the desktop computers and everyone having Windows, and they engage in monopolistic business practices where they curtail competition and so forth. With companies like Walmart and Amazon, I think it's tough to make the argument that they're engaging in business practices that are hurting or preventing other people from coming into the marketplace. With Walmart, of course, when they would move into a town, they would, for a period of time, keep their prices lower than local competitors, like, for instance, grocery store prices. But Amazon doesn't really do that. I don't think they are trying to, target other competitors and put them out of business necessarily. In fact, they're making themselves a platform where anyone can sell goods on them. So I think it's tough. I don't think they're going to be able to really do that. But the other technology sectors, even though I said I'm skeptical, that Trump or whoever is going to be able to regulate Google search results, there are arguments that I think that can be made that these companies are in effect media companies, especially something like Facebook and Twitter, and they try to say they are not. And we've got regulations, which you know better than I would with your background, in regulating what can be said on television and who can put up a television channel. So I think if people start to think of Facebook and these things as media companies, it could see some regulations come in and impact some of these popular stocks, and maybe it'll start in Europe first with trying to protect people's privacy data. So I do think, it may not be Amazon that becomes targeted, but some of these other companies could run into some regulatory issues in the coming years.
We'll have more with Mike Swanson right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and planned for Canada this summer. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, what's happening with precious metals right now?
Well, it's tough because gold went through $12.20 an ounce last month, which had been support all year, but the GDX, the gold stock index, it broke down too. And the gold stocks tend to lead the metal. What that means is if they perform worse than gold, which they're doing, that's a negative sign. And it suggests to me, unfortunately, that they're probably going to go lower. The good news, though, is that a lot of the small cap stocks really aren't dropping at all. But they hadn't gone up that much this year. So I think that's probably why I don't think there's many people in them to sell them. Whereas stocks like Newmont and Barrick, they're like leading the way to the downside. But I think the trick is to not like throw in the towel on them and just give up or stop watching them, but to keep our eye on them and look for a turning point where this drop will end and things can bottom out. And I don't have a way to predict what price things bottom at. Instead, I look for a change in the trend, and what I'll be looking for is the gold stocks to start to perform better than gold. So if at one day gold is down, let's say $20 and GDX and the mining stocks are not down, then I think that would be a sign, okay, the stocks are telling us that, we're probably going to bottom down here. So I'm just waiting for something like that to happen, but it hasn't happened yet. And I fear that really that they're probably falling with commodities in general linked to emerging markets. Also, which amazes me, but the agriculture commodities are trading at all-time lows. The DBA agriculture ETF made another 52-week low just the other day, and it just seems to do this every month. It's like all-time lows for agriculture commodities. So, yeah, it's just a general weakness in the commodity markets. But this also happened in 1999 and 2000, and significant turning points were made in these markets, major bottoms, and that year also coincided with the top in the stock market. That doesn't mean this all has to happen this month, but I do think we will see major turning points when this decline is over with, but it doesn't look like we're at the end of it today.
Well, it's funny that agriculture stocks are way down, yet the price of food doesn't seem to have gone down at all. No, not in the grocery store. It sure hasn't. I don't really know the explanation for that, but the commodity prices, like for corn and rice and all these things, are just as a whole, they're trading at all-time lows. But I don't know the reason. You don't see that in the stores. I guess they got marketing costs and whatever they add on to it. But it's not a good time for farmers. That's for sure. a lot of small and medium-sized businesses say they're having trouble finding personnel, yet wages haven't gone up a lot, and usually that's how you attract new people, but are they really suffering that much?
Well, I think it depends on what business you're in as far as being hard to find people. I mean, the data is, they say, the unemployment rate is at these lows, but in reality, a lot of people are working 2 jobs and working part-time, and that's a lot of the reasons the wages aren't going up. Actually, in fact, this year, wages are actually down a little bit, even though the unemployment rate is down too. And I think at this point, it's not, in the 20 years ago, you could point to people losing jobs to companies moving overseas, but I don't think that's the cause now. Instead, I just think there's a drive in corporate America to keep wages down as much as they can, to squeeze out profit margins, and one way they do it is by outsourcing and creating all these dummy companies that hire the people. For example, if you stay at a Marriott hotel, there's a company that's going to own the property, then there's a company that's going to manage the hotel, and then that company doesn't even hire the cleaning staff. They hire another company to pay to do that, and then some other company is out there working on the grounds and so forth. And what this does is it creates so much competition to do these various jobs. For example, I just used the example of a housekeeping staff. If you own a hotel and you don't directly hire the employees that do the housekeeping, then you go and you pick from, a dozen or whatever housekeeping companies and hire them. Well, by having all these people competing for your business, it causes them to want to give you the lowest price, and the best way for them to do that is keep wages as low as possible. And I think that's an overall trend that's going on throughout the United States and probably other countries too. That's the real explanation for why wages are low. It's this outsourcing to local businesses. It's causing them to, not to be under pressure to keep wages low themselves. And the workers can't unionize or very easily because it's a disaggregated marketplace that they're working in.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. You can find us on Twitter @HowStreet. You're listening to HowStreet.com Radio. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.